Good morning, everybody. Welcome to today's midweek update. I am Mike. It's been a busy morning so far in markets at Merrill Wealth. We had our first Traders Circle earlier today. If you were part of that, welcome back. Yeah, Caleb, hey, still a long time no see. So, want to jump in and talk about markets because, well, that's why we're here, right? So we'll start off with the major indexes, and I have the major indexes: the S&P 500, the Nasdaq, the Russell 2000, the New York Stock Exchange, and the Dow up here, and we also have the IBD 50. Now, each one of them are consolidating. Each one of them are consolidating fairly tightly, right? Even though you have the Dow trending down and you have the Nasdaq moving up, what do you see that basically across the board the action is tight? It's not like where you have tight action here and wide and loose happening somewhere else. It's tight across the board. And I, that I see that as a big positive. Minnie's Bub, welcome to the live stream. So I think that gives us a certain character trait of this market where the action is tight. Sideways action, but it's tight pretty much across the board. Now, the thing that I mentioned earlier, I've mentioned it on other live streams, I'll mention it again here, is that the way that we are, or the way that I go about defining the market's mood is just like this. And I think I'll keep this sheet here. It's handy to have this out. So this is how I go about defining the market's mood. I look at it through these three lenses. What we just saw on the screen is part one of the general market. Now, you might say, what is part two? Well, part two is taking a look at the market across time frames. So like to check it out on weekly and also on monthly timeframes as well. The reason why is because it's so important to have a broad perspective. You ever hear that saying, missing the forest for the trees? Well, that's what can happen in the market. If we're just constantly zeroed in on a daily chart, sometimes you might even get sucked into an intraday chart. It, you start to lose sight of the bigger picture. That's why even for the indexes, I like to take a much broader look and see, well, what's happening on daily timeframes, weekly timeframes, monthly timeframes. Are they moving in the same direction, or is it, kind of all over the place? What I've noticed for quite a while now is that take a look at the monthly trend, and it's been just steadily moving higher month after month after month. It's really been that way since November of last year, right? Moving up, moving up, moving up. Yeah, you get a little bit of a pullback, then you steadily marching on higher. So that's the backdrop for why it's been a pretty good environment to be buying. On whole, right? It's not where you're just buying constantly, but pullbacks have been opportunities to buy. And the way that you trade it is, going to be dependent upon, well, where are you within the broader uptrend? Are you over here at the top? Are you more down here towards the bottom? Where are you buying in? Where we're at right now is seeing the market trade very, very tightly. And there's two big things at play right now, right? Can you guess them? Some of you have heard me mention this a couple of times, but the two big things at play right now are earnings and presidential elections. Um, See a couple of comments coming in from Minnie's Bub. Got roasted on CMG, had a long-term trade in it. Luckily exited at minus 0.2R. Well, that's good to get. We always want to get out with as small of a loss as possible. Yeah, here's what Chipotle did. Yeah, sometimes that will happen. I have this one annotated. I never bought this one. I didn't buy it recently, but sometimes trades will gap against us. Sometimes they'll trigger a stop. But the main thing I think for trading uh, is having a system. And we spoke about this morning during the trader circle. So you have a system, and what generates profits for us isn't this trade or that trade. It's the system. So what's the system? The system takes trades. So you're taking a look at the broader perspective. Okay, over 100 trades, I should have more money in my pocket than what I started with, right? If I don't, then all right, system's wrong and something needs to be tweaked, or maybe it just needs to be tossed out the window. But over 100 trades, you should come out with more money than what you started with. On any individual trade, we might get smacked, or we might end up with some pretty hefty gains. The way that you have a trade like this really rise your equity curve, right? Right now we're looking at Reddit ticker RDDT. The way that this is really going to raise the equity curve, one is by having it not need to pay for lots of large losses, right? Because if it has to pay for lots of large losses, then you dug yourself out of a hole. Now you're out of the hole. Maybe you're starting to climb out of the hole. But if you start to rack up more large losses, then that's people get stuck in neutral that way. That was me for a long time. Another thing that people get stuck in, and I also experienced this for a long time too, is not having enough size on. So one of the things that could be very, very frustrating is you have a giant winner, but you only have a couple of shares in it. So something's up 70%, 80%, but your account is up maybe, I don't know, 1%, 2%. That's no good. That's no fun. Maybe it gives you a story to tell at a bar, but it's not making a big dent. So we need to have enough size on, as well as not digging ourselves into a hole. So mini bub, very good for you for uh, taking the small loss in CMG and not letting that balloon into something huge. The way that I like to figure out, well, how big or how small should I be trading, has a lot to do with this diagram right here. Right. So we started to talk about the general market. What we need to talk about too is the system. So, well, what is the system? The way that I look at system is the stocks that pass my screens. So here's a spreadsheet. I'll pop open Deep View. Right there. This is a relatively new screener that I use. So I'll run a variety of screens, and I'll run these screens once a week. I've got here's each of the weekly screens that I have. Ones that look for sector leaders, ones that look for stocks with accelerating earnings and sales. I have ones dedicated to IPOs. I have ones that look for really strong earnings and really strong sales, fund ownership, and ones that are have loads and loads of momentum. And I'll run these screens once a week, and I'll build what I call a universe list. So that way, well, when I take a look at what's on my universe list, I know that everything that's past this thing has already passed my screens. If it doesn't get to this point, I'm not interested in it. Right. So let's say that you're like, oh, Mike, well, what do you think about, I don't know, name a stock, right? If the stock that you name isn't on this list, well, we could talk about it, right? I'm not going to be a jerk and say, oh, the hell with that one, but it's not going to be something that I trade. And the reason why it's not going to be something that I trade is because if it's not on the universe list, then that's one of the ways that I filter out all the noise. big theme the last couple of days now, right? I sent out an email to all of our people on our newsletter list. If you're not already on this list, I'll flash the where to get that. You get that at marawealth.com/newsletter. But the topic the last few days has been, how do you filter out the noise? Well, one of the ways that you're going to filter out the noise is by having screens that you're going to run, building a universe list, having a rule that says, I'm only going to trade stocks that show up here, right? Right now, there's how many names on this list? There's 273 names. Then that means that there's also over 10,000 names that I'm not even looking at. And that helps to filter out 99.9% of the noise out there. Build a universe list. So, part of what I've been seeing from my universe list is that there's been a few more names setting up lately. And so I keep everything in a spreadsheet. I find that it makes it a lot easier for me to see at a glance where things are at. And I don't expect this spreadsheet to make a ton of sense to you at this point, but it does to me. Um, I will mention a couple of things on it though, like this right here, where I start to see more stocks that I want to set alerts on, more stocks that I want to actively trade. When I start to see that, that points towards this part, the your system part of the market's mood. So if there's more merchandise out there and I'm taking a look at it and I'm like, you know what, that merchandise looks pretty good, then that's something that's going to, you know, get uh, get my appetite going. And when I take a look at the quality, and if the quality's good and I'm starting to have good performance, then that's something where I'm going to start to step on the gas. Right now, we're in what I call a yellow condition. Yellow condition. What's a yellow condition and what constitutes a yellow condition? A yellow condition is basically just like average sizing, right? Where I'm not putting on a ton of risk, I'm not putting on very little risk. It's right smack in the middle. Now you might be saying, well, market looks halfway decent. Why would you be a little bit cautious here? The reason why I'm a little bit cautious, number one, earnings season. Number two, the presidential election. Number three, and this is a big one too. Down here, I have this indicator that measures the number of stocks making new 52-week highs every day and new 52-week lows every day. And I look at this kind of like an oscillator. If there's a lot of stocks making new highs, right, then that's something that'll keep on pushing the index higher. If there's a lot of stocks making new lows, then that's something that will naturally drag the index down. Because if there's a lot of stocks that are making new lows, how could the index possibly keep on making new highs, right? That just makes logical sense. So right now, it was doing pretty well earlier in the week. Then it started to really dry up. You see over here in the middle of the week or towards the end of last week, we had 65 stocks making new highs, 36 stocks making new lows. When the index is like that, it's in this cautious area. It could roll over, it could correct more, or it could set up to break out. So the way that I'm going to make sure that, hey, I just had some really great gains. The one of the ways that I'm not going to give them back is to not be aggressive when the market's telling me, you know what, probably should be a little bit cautious here. All right, so this right here is the going to be the seatbelt, at least right now, for how I'm going to place uh or size my trades. Does that make sense? Let me know. Type into the chat if that part makes sense. So we also have the new highs versus new lows on the New York Stock Exchange. Those ones too, pretty low right now. Only 51 yesterday. Stocks making new highs versus 35 stocks making new lows. It's time for cautious. Well, what I like to see isn't that close of a ratio. I like to see this kind of a ratio from a couple of weeks ago where we have 200 plus new highs and only about 14 or so new lows. Right? You want the odds to be way tipped in your favor, and then that's when you bet heavy. If you're playing poker, imagine like you got a pair of aces and the other cards are coming out. That's where you start to be like, oh man, maybe this is a hand where I should be betting heavier. Well, guess what? You don't have to play every single hand in the market, and you get to see what cards are coming out and adjust your bets accordingly. This is how this becomes the best game in the world, right? You get to see the cards that are being dealt. You don't have to play every hand. You can make that. It's basically you get to be the casino, right? I'm sure you've heard that analogy before. Trade like a casino. Well, this is how you get to trade like a casino. You don't have to win every hand, but you do need to have the odds be in your favor and bet heavier when they are. Here's some of the stocks that I'm in right now. And this is what's having me uh, have the capital to bet heavier, even though I'm not betting heavy at this point because the merchandise or the general market are telling me, you know what, that it's good, not great environment. But here's Reddit. Reddit exploded for us. I took some off earlier today when price opened, and I still have partial position left in this. Price is up roughly 70% since buying it on what day was that? That was back here on October the 3rd. Duolingo was just bought this morning. Broke out to new highs. This is breaking out of a high type flag. Earnings is in a few days, according to TradingView. Well, when's earnings? Earnings is November 6th after the close. So we'll see how that does. If price is able to work its way higher and follow through, one of the things that I love to do on my trades is get my stop to break even as quickly as I can. The reason why I want to do that is because it takes that initial risk off the table. Just like how what was mentioned earlier with Minnie's Bub talking about uh, keeping the losses small, right? He had Chipotle, and Chipotle had gap down, only had a 0.2 R loss on the trade. That's good. You don't want to lose that much. The more that you could keep the losses in check, the higher your equity curve is going to be able to go. So this one here, uh, within a day or two, I might even start to raise my stop on Duolingo today to get more risk off the table. But right now, the risk on this is only 4%. Is a comment from Caleb. Reddit was yellow condition when I got in, so not as nice of a gain as it could have been, but still substantial at this point. Yeah, so a yellow condition is your standard sizing. So for me, when I'm looking to take a standard size position, my standard size is roughly anywhere between 8 to 12% on a trade. On an oversized position, I'll go up to 25% during a green condition. Um, and then in the red zone where the market is very choppy, but I'm still finding some high quality trades, that's where I'll put out a feeler. And those feelers are generally 6.5% of capital. I base my standard size on green conditions. Um, yeah, you might want to be more aggressive. We could talk about that. We should talk about that. How to size well, when to get aggressive because yeah, well, the standard sizing should be what's taken most of the time. We want to get aggressive just at just when it's time to get aggressive, right? Well, when everything is firing on all cylinders, when our current trades are proving themselves, when the market is in a strong trend and continuing to produce gains where there's not these kind of warning signs, like new highs and new lows starting to get wonky. When the stocks that you are looking at for your setups, when they're producing high quality setups and those setups start to work, that's a green condition. By your definition, I think that's how I was doing it, just the difference in semantics. Okay, fine. But yeah, that is the process. And everybody has a little bit different of, well, what's my largest size going to be? What's my smallest size going to be? How much risk I'm going to put on per trade? The most I the most capital that I'll risk on a single trade is 1.5%. I don't like to go much bigger than that. Maybe in extreme circumstances, maybe 2%, but definitely no larger than that. Uh, on most of the time, my risk on trades is less than 1%. But the way that I get that to work for me is having the entry and the stop be so tight that I'm able to put on large size while barely risking anything. um, Andrew O'Connell, who my friend Dennis Wilborn and I will be interviewing in a couple of weeks. He's currently number one in this year's U.S. Investing Championship. I believe he's up 400% or so on the year. And one of the things that he recently tweeted about or X'd about, posted about, well, whatever on X, it was that he sizes in this way. It's one of the strategies and tactics that Van Tharp talks about in his books. Talks about it in Super Trader, talks about it in The Definitive Guide to Position Sizing. Fantastic books. I highly recommend reading Van Tharp if you haven't yet. But those are some really great great books to read. So anyhow, a couple of other trades to consider. These are some of the ones that I was looking at coming into today. So Duolingo was one. We spoke about Duolingo. I ended up trading Duolingo. I've got a position in that now. I was looking at KRNT. This one hasn't broken out yet, but I think that the price and the volume action is very good at this point. Well, I love seeing price run up on heavy volume. I love seeing it pull back on very light volume. That to me, that this is the ideal kind of price action you want to see. Then when price bounces back, you have that big uptick in volume. Now price is consolidating again, volume dries up. I don't think that you could ask for more textbook price and volume action on here. Just waiting for it to break out, and the level that I'm looking at is right over here, right at $25, and well, what do I have this set at? 25.28, so or 25.35, somewhere around there. BLCO, this one, I think this one is kind of funky, right? Because if this is correct with earnings coming out this morning, then volume is crazy light, isn't it? when volume is light on an earnings day, I tend to stay away from it because it's just behaving weird. Here's net, net. This one is having a halfway decent move. This one was triggered an alert earlier. I didn't trade this one. I don't think I'm going to trade this one. It's having a halfway decent breakout. Volume was good on the breakout. Yeah, I just don't feel like putting on another position here. If it pulls back and tightens up a little bit more, maybe I'll trade it in a couple of days. But not it's good, good, not great. If you took this one, I'd still like it, and I think that the setting a stop below $86.90 is still a good spot here. But yeah, well, what questions? Well, what stocks do you want to look at? What questions do you guys have? Um, let's hear some comments. Alrighty. How do you navigate around earnings with your trades? Very good question. Let's let's talk about. So here's how I navigate around earnings for my trades. So the first thing that I want to do is see where am I at in this trade. So let's use Reddit as an example. So Reddit was started back here, right? So Reddit was started back here on October the 3rd. So I bought that plenty of time until earnings, right? So price runs up, hits a scale out, pulls back, hits another scale out. Now I've got half of my trade off at this point, and I'm trying to let the rest of it work. So at each point of the trade, depending on where I'm at in the trade, I treat it with slightly different rules. The more that price runs, the more wiggle room it has. The less that it runs, the less wiggle room that it has. It's just like it's almost like if you were to hire an employee, right? Like on day one, they're not going to get a whole lot of leeway. Day one, they show up late. They're not in their uniform. They're probably going to get kicked out, fired. Well, with later that day, if not perhaps even within the first couple of days. But if they do well, then they earn some wiggle room, right? Like the top performer, but I don't know, a month or so in that they show up late once, that they've got a good excuse, then it's just like, yeah, all right, it's an anomaly, but not on day one. So we get over here and price is up, and there's no rule for me that says that okay, I've got to sell here. So I hold. And that's in a nutshell how I will go about handling earnings. Do I have a rule that says that I should exit this trade? I don't have a rule that says that I should exit a trade because of earnings, but I have rules that say take profits when price gets to X, uh, sell a portion or sell all if price starts to fall below levels that I've set. If there's a certain number of danger signals, then I'll sell 'em. So, well, what are danger signals? That's this handy indicator here that I just turned on that'll tell me how many danger signals there are at any given point in time. So I'll flip that danger signals indicator on at the end of each trading day or towards the end, maybe about an hour or so before the close, and see, well, how many danger signals are there? And if there's too many, then that'll prompt me to take an action. That the danger signals indicator, I think, is great. it brings awareness to the types of things that are happening in a stock at any given point in time. This indicator is for free. It's one that I made jointly with Brandon Shapiro, and he took the ideas that I had in the Trading Mind Wheel book and helped to generate this indicator here. So I'm just going to grab a blog post for you guys. I gave this blog post out at an earlier meeting, but I'll give it to you here too, so that way I'm just grabbing it from my blog here. It's this one, and I'll put this link into the chat so that way you guys can go and check that out later. But yeah, that in a nutshell is how I go about handling earnings. Any other questions? We are already at the half an hour mark, and if there's any other questions, I'm willing to stick around for one or two more moments here. But if there isn't, then we will wrap things up very soon. If you have not already liked and subscribed to the channel, make sure that you do that. Share this show and share the things that we're doing here with other people. That's how we're going to gain more awareness, and how we'll be able to keep on doing stuff like this. If you would like to work with us directly, we've got a whole bunch of information over on marwealth.com. Reach out to me. Let us know. We've got a couple of different programs. We've got a research program. We've got a group coaching program, a bunch of books and courses and stuff like that. So reach out. Let me know. I'm here. I want to help you guys as much as I can. And the way that I'll be able to do that is by you reaching out and telling me what you need. So enjoy the rest of your week. Enjoy your day. Happy Halloween to you. And I will see you all next time. Take care. Much love and God bless.